bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily review for Wednesday the 20th of October 2021. Time is just coming up to 0440, 20 to 5 in the morning GMT. Asian session coming to a close, European session firing up, our lunchtime North American session. Right, yesterday then, Tuesday the 19th, we had a positive opposed driver in the pound at plus 176, front and back door flows, mainly coming out the yen at minus 118, out the dollar at minus 87, and the euro was the positive rock at plus 29. Activity plus or minus 205. Right, intra-week then, this is from Monday the 18th open to about 15 minutes ago. We've got a negative opposed driver in the yen at minus 204. Front and back door flows mainly going into the pound at plus 69, into the euro at plus 128, and out the dollar was the negative rock at minus 93. Activity plus or minus 297. So we've got the same batting order: yen, dollar, euro, pound. But we've got different driver on yesterday then. So we got the pound positively driving, whereas over the week we've got the yen negatively driving. So we're starting to see a slight shift. We're starting to see a peaking out of the yen on the negative side, and a drive into the pound yesterday. And if you look, we've got a slight reversal of this again. We're back to business as usual. Intraday then, this is the Asian session to about 15 minutes ago. We've got a negative unopposed driver in the yen, minus 74. No backdoor flows, the opposing positive flows mainly going into the pound at plus 65, into the euro at plus 7, and the dollar's the positive rock at plus 2. Activity plus or minus 74. So we've got this yen weakness dominating again, like we did over the week, but yesterday it wasn't quite so much. That's where we are. So we'll stop it there and write up the flows. Right, we've written up the flows then. So the euro's weak except against the dollar, the yen and the Swiss. The yen is weak except against the Swiss. The pound is strong except against the AUD and the NZD. The Swiss is weak across the board. The dollar is weak except against the yen, the Swiss and the dollar. The CAD is weak except against the yen, the Swiss and the dollar. The AUD is strong except against the NZD. The NZD is strong across the board, and the dollar is weak except against the yen and the Swiss. So what have we got then? We've got New Zealand strength again across the board. Swiss weakness, and if you look, we've got sort of weakness in the dollar, the yen and the Swiss, which tends to be sort of risk on. And remember, the flows in the Asian session are fully in the majors are fully yen weakness. It's the unopposed driver, and we've got strength in the AUD and the NZD. So that's sort of commodity currency strength as well. So what's going to knock it about, or has knocked it about? Well, today then we've had the China rates decision, which was fairly, in terms of numbers, was interesting. We'll talk about that in a minute. We've got GBP CPI, CAD CPI. So we've got inflation data coming out today. Tomorrow, Thursday, we've got the European Council meeting and the Reserve Bank of Australia Governor Lowe speech. On Friday, we've got German manufacturing PMI, composite PMI, Euro PMI, GBP PMI and CAD retail sales. So we've got a lot of inflation data coming out basically for this week, a bit of retail sales. Now the China thing, the expectations of further rate drops are reduced. So arguably that's sort of quite, that's a sort of more hawkish stance in China. That they're talking about intervening in the coal market. and that's obviously off the back of rising coal prices, which China will not. China's very committed to coal, and China has had to inject significant liquidity via open market operations, which is basically buying and selling of bonds. So the liquidity element is interesting. China is obviously under a bit of financial stress. If they start to talk about intervening in the coal market, open market operations, and there is stress in the China market, which is worth bearing in mind for the global risk on risk off trades. Anyway, we'll stop it there and write up the asset classes, then do the final analysis. Right, we've written up the asset classes then. So US dollar index, basically big pump up, drop off. Now it's coming back to 0.31 from the high. It's 31% above the modelled high. So the dollar is relatively soft, but it's thinking about going up. Gold is still below half marks. It's 0.42 from the floor. So gold is still on struggling. Oil did this break. And it's plus 0.38 above the resistance, so it's 38% break on the resistance. Wall Street, S&P Tech, it's all got the same look. It's got a big pump up, big drop off, and now they're sort of nearly back at the highs. Wall Street is 0.11 from the high, 11% off the high. S&P is 15% off the high, 0.15, and the Tech is 0.24 from the high. 24% off the high. So that's the batting order as well. So it's Wall Street leading, S&P next, Tech lagging. US 10-year in the bund. This is the prices of the bund. We've got this punch down in prices. So we've got rising yields. We've got a break on the support, 0.15 on the supports in the US 10-year. So we've got a 15% break in the support, which is rising yields. Likewise with the bund, we've got a 0.05 break of support, so we've got a 5% rise in yields in model terms. So in other words, US yields are starting to outstrip bund yields again. Right, copper, big break, but it's come back. It's 0.25 above, come off from the high, so it's 25% off the high. But it's still above the break, and US steel is about a fifth off the floor, 0.22 from the floor. Right, so we'll just rub this out and then we'll do the final analysis. So basically, we've got this situation now where we've got a lot of inflation data coming out for the rest of the week, PMIs, which is producer price index. So this is sort of relevant to imported and exported inflation to different nations. So let's get the framework up here. Dollar, euro, yen, pound, and then we've got the CAD, AUD, NZD, and the Swiss. Right, so just grab that paperwork then. So in flow terms, we've got this yen now in the Asian session back as the unopposed negative driver, and as you know in the majors anyway, and as you know this is says one of two things. It has been for quite some time. It's either a floor in the yen, in which case the yen is going to bounce up, or it's the continuation of a strong move down. Now we've had a long period of continuation in the yen. The yen on a weekly basis is 204 minus 204 points or pips as a complex. Last week I think it was about nearly 900, so that's 1100, and the net for the previous 2 weeks before that is about 300. So we're about the sort of 1200 mark. It's stalling out the yen. Now this China issue is basically a warning signal that all is not well in China, etc. So and the dollar yields are signalling issues as well in the US 10-year. So the dollar's come off like so, but there's a good chance we're going to see dollar strength, and if we see dollar strength, China issues, we've got a positioning that's heavily negative on the yen, equities are very vulnerable, and they're up near, equities are up near the highs. The chances are they're going to have a little peak at the highs again, and then we're going to see sort of a double, treble top sell-off. So equities, we are going to get this sort of effect, and if we get that, we're going to get yen strength, and the pound has benefited significantly from the weakness of the yen, so the pound's likely to do an about turn. So you're going to have the pound going to negative, the yen going to positive, the dollar going to neutral positive, and the euro will go neutral negative, in our opinion. AUD and NZD are likely to go up a little bit more, but boomerang, and the CAD is likely to come off as well. Oil prices, depending on how bent things go in the macro markets, oil. If you look at oil, oil's going to start to become an inflation issue shortly. So we think oil. The markets normally like to rub it in. We think oil's going to charge up a little bit further. So that's the basic scenario. Equities are likely to just tip up a little bit today, and then maybe start selling off as this inflation data comes in. If it comes in strong, the market won't really like it. PMIs come in strong. The likelihood equities are going to be very vulnerable, and when we get this thump down, there's a lot of people holding short yen positions who are going to bail. So just bear in mind. So that's what we're looking at. We're looking at this tipping point catalyst for the markets, and the chances are that the Nasdaq and Wall Street will lead the way down very viciously. So we could see quite a significant equity correction by the end of this week or next week. Just something to bear in mind. So that's what we're thinking. Hopefully you're trading safely, and we'll see you tomorrow for the daily briefing. Thank you for watching.